we have with us Gaurav Pandey, the MD and CEO at Godrej Properties, joining in on the show right now. Remember, you're getting the quarterly updates as well coming in. Real estate by far year to date has been the best performing sector as well. So let's chat a little bit more about this with Gaurav. Gaurav, hi, great to have you on the show. Gaurav, specifically talking about Godrej Properties, given the spate of land acquisitions you've done recently, how's business development expected to pan out for the full year? And also, do you think your business development guidance would be a bit conservative as opposed to last year?
Essentially, we see last financial year was a very exciting year for us because we saw amazing set of opportunities at the right price point, as well as the micro markets and locations. We were very clear we wanted to take our presence stronger. And we did close to about 18 transactions with a logged in booking value of about 32,000 crores. So you're right that last financial year was really an exciting sort of point of inflection. And we've seen a good start for this financial year. We've already concluded 2 transactions, as you would have known, with one in Kolkata and one in Gurgaon. And we expect the momentum will continue. And we are hopeful that our guidance that we've given for business development will meet. Finally, what you achieve, especially in investment opportunities, is more guided by the opportunities you get to see, in terms of land market. So if we do see is when we actually really move to a transaction. We're not really dictated by a sort of a clear target in our mind that this is what we have to achieve. It's more about the opportunity that we get to see in market. So if we see more exciting opportunities, we would continue to explore more, but we would be more than happy to be very selective and take bets where we are very confident in terms of creating profitable growth for GPL.
I take your point completely, but Mumbai continues to be quite attractive market for you, as you also highlighted. But you have been acquiring parcels, as you point out as well, in Kolkata, Gurugram as well. Is this a specific strategy in mind to get out of Mumbai and diversify more, or that's just how demand is looking like to you?
Thanks for the question. See, essentially, if you see, we are very clear in our stated strategy of being present and deepening our presence in the 4 large geographies, which is NCR, Mumbai, Bangalore, and Pune. And if you ask me where we see the most potential excitement happening right now, and where we also need inventory, it happens to be markets like Gurgaon, which is presenting a very consistent performance in our portfolio and market overall as well. Bangalore, because Bangalore has been one of our turnaround kind of a zones last financial year. We grew from a base of around 700 plus crores to 2000 plus crores in one financial year. So Bangalore will be a place we will continue to invest. And Mumbai and Pune are anyways opportunities which we have concluded and will continue to explore. So we see presence and deepening of presence in these geographies. In tier 2 and tier 3, frankly, not really looking at any opportunities on the group housing side right now, other than, of course, plotted opportunities where we feel it's a low risk and high return and a short duration kind of a opportunity, and at the same time getting to learn from the market what kind of market it presents from a long-term point of view. But our focus continues to be exactly on these 4 key geographies.
Okay. Morning, Mr. Pandey. Now, we also wanted to get in your take on the launch pipeline. What are some of the launches that you've planned, and what would be the potential top line?
So, we have a very exciting launch pipeline thanks to the great business development that we did. Our teams could pull off last financial year. And we hope to see some of these launches happening up as soon as H2 of this financial year. From a pipeline point of view, if I talk about new launches as well as phase activations, which is unlaunched phases of projects that we have a very exciting pipeline of 28 projects / phases. Of this, you would appreciate it's very much dependent upon the approvals. So it will be fair to estimate that some of this will happen, some of new surprises might also happen. But overall, a very exciting pipeline we've built. We've given a guidance of 14,000 crores for FY24, and we are reasonably confident of achieving that.
Right. As per a latest ANAROC report, housing sales were at an all-time high in the quarter ended June 30th. How have your sales and bookings panned out for the first quarter? And could you also highlight the factors aiding the momentum despite headwinds, such as large mortgages, layoffs, etc.?
Q1, I don't want to comment because we still haven't released our Q1 results yet. That aside, I think if you see overall, the trend we are clearly seeing in the last 18 to 24 months is that market is very, very exciting right now. We are seeing unprecedented attraction from end users. We are extremely product driven as a company than just aspirationally looking at payment plans, which some geographies, some players may be doing. So our end user driven products, we are seeing fantastic demand and some reasonable price growth as well. And we expect the same momentum to continue. From a booking value or a performance from the year point of view, I think it will be launch driven. So whichever quarters we get to see more of approvals coming in on time, you will definitely see much stronger spikes in those quarters. But on a complete year basis, the guidance that we have given, we seem very reasonably certain to go towards that trajectory.
Sure, but just before we let you go, Mr. Pandey, your take with respect to how the demand-supply dynamics are shaping up, because on one hand, the new launches continue to be quite high, but then there's this worry about increased inventory as well. What's been your reading?
See, supply and demand, if I were to break it down, right, again, there are different developers, different product strategy, market strategy, and that itself determines risk management as well as ability to charge a premium. So if you see Godrej properties in the last 10 to 12 years, even in a degrowth market, which was pre-COVID, we were the only one of the few players which were actually clearly seeing benefits of consolidation and growth. It so happened that we moved from 5,000 crores to 7,800 crores in, for say about 5 years, from FY18 to about FY22. Last financial year was a point of inflection for us where we grew more than 56% to 12,200 plus crores kind of a number. So, and that clearly represents the strategy that we have focused is end user driven markets. And that is which is continuing seeing demand and which allows you to charge up to, of course, a logical level price premium opportunities. In the current cycle, again, I think we have to take supply with a pinch of salt because, what attracted to consumers, what we are seeing right now is that they are more focused, especially post-RERA, they're more focused to developers which are corporate, which are sustained there for a while, which have good corporate governance. And that gives you sort of an edge. So from a demand point of view, we see that developers who have that similar repute, they tend to see very fantastic launches as well as good sustenance sales. And that allows them to charge a reasonable premium to their product. They're not really driven by sort of a figure of absolute inventory launches, which we get to see. Because some developers will launch products designed for investors. We tend to refrain from that segment.
Appreciate your time. Thank you so much for joining in and giving us a sense as to how business is shaping up at Godrej Properties.